All right, everybody. Welcome to today's edition of the Master Mentor interview series, right? So today we have Miss Felicia Fung here with us, right? And so it's going to be exciting interview. I think there's a lot of things we have prepared for you, right? So exciting stuff. So before we begin, firstly, Felicia, I'd like to share a little bit about yourself and what you do.
Yeah, so for me, I guess, even my community of followers, they also don't know what I really did previously. For me, I kind of, my journey was kind of that very typical cookie cutter Singaporean journey. So I scored my A's, I was a Reflesion, got that scholarship, got that whole MNC job, and I was in management consulting and corporate strategy. So I was working with the Fortune 500 companies like Google, like Accenture, UBS. I was working with their C-suites. I was working with their CEOs, their COOs, CDOs, all the C, blah blah blah.
Yeah.
I'm charting out mandates for the company on how to grow, on how to what we call win in the market, on how to be at the cutting edge of a landscape that's ever evolving. I mean, when we study companies, when we study stocks, when we study various industries, we know that things are moving so quickly, right? So how do you
Yeah.
strategize and move along and to really establish your footprint in the market?
Mm.
So like market expansion, pre-M&A, digital transformation, so on and so forth. So that was my background, and it's also where I gained that business acumen to apply it into investing. Highly intensive, high stress job.
Yeah, for sure. It sounds really intensive. So, like, I guess with the background you shared, right, like, it's what I call like the typical Singaporean success story, which is a good thing, right? And so was it, I guess, to move into the world of like investment education, right, a bit startup-ish, right? Was it very difficult, right, based on your background, to leave the corporate world, your job, a lot of great prospects, right? Honestly, right? So what were some of the considerations? What propelled you to make a decision? Was it easy to do so, right? And what's your, I guess, the interesting is what was your thought process, right, when you decided to make the jump or the move, right, to a company to where you are with Sean right now?
Yeah. Wow. Mark, when Sean first reached out to me and then he presented the opportunity, I was like, oh my goodness, this is like completely 180 degrees difference. Honestly, I was like,
Yeah.
what? Really? And when you're asking me about like thought process and the considerations, basically there were three things that I asked myself. Okay, these three questions. So the first question I asked myself, if I don't take up this opportunity that Sean has presented, will I regret? Will I regret it? I asked
Mm.
myself, what's the
Yeah.
worst that can happen? Right. So then my answer to that was, yeah, I think I will not regret my failures, but I will regret the things that I didn't try. So I would rather
Mm.
have tried and failed, right, than to not have tried
Mm.
at all. So that's the first. Um, and the second thing that I ask myself, okay, what area do I want to grow in and learn, and does this fit into it? And sharpening my investing skills, being able to work with Sean and the team, I mean, it kind of like made a lot of sense to me, in the sense that when I was in the corporate world, I really saw for my own eyes, right, how people were exchanging time for money. I was slogging
Mm.
my ass off for like 16 to 19 hours. Also, I'm not even kidding. I mean, I'm not even kidding.
Wow.
It's very, very intensive hours. And it came to a point where I had such a realization, such a revelation, right? Warren Buffett says, if you don't find a way to make money while you sleep, you will work until you die.
Yeah,
so, so
for sure.
yeah, so second question, and then the last question, I just asked myself, okay, who can I learn from, right? And very importantly for me, I personally really look up to Sean because he holds very, very grounded values. He's really, I mean, he has taught me so much on not just 做事. I say, right, that all these years of being in the corporate world, I've learned how to 做
Mm.
事. I can analyze well. I know
Mm.
how to manage the stakeholders, in a global organization. I know how to manage budgets, chart things forward, and all these technical skills I've gained it. So I've learned how to
Mm.
做事. But Sean has really taught me how to like 做人, in terms of how you
Mm.
build relationships, how you go about doing business from a very, very different way. And the values that you hold. This were the three things, the three things that I asked myself, and it propelled me into making this decision. But honestly, it was very, very difficult because I had to give up a lot. I was in Shopee for a short while. They headhunted me. So they
Yeah.
were very, very generous with their shares and all that, right? So I had to like relinquish all this, and and there were a lot of things like, I mean, I felt like I was starting from ground zero again. I felt like I was
Yeah.
literally starting from scratch, because previously the people that I was catering to were this multi-billion dollar businesses,
Yeah.
and then I'm catering to the masses, so it,
Mm.
it took a huge adjustment. I mean, I took a huge leap of faith, and I must say that, wow, it's been an eye-opener.
Yeah, sure. So anyway, thanks so much for sharing, man. Like I'm sure it wasn't an easy decision, right? I'm sure there was a lot of consideration involved, right? But I'm sure to adjust from the corporate MNC space to the startup might be a little bit tricky or a little bit challenging, especially when starting out, right? Because there might be a different culture and stuff. Maybe just share a little bit, of your experience, right? And maybe like some of your biggest lessons of, right, the differences between working in the startup versus corporate, right? Just for some people who might be thinking of making the shift, right, from a big, stable, large corporation, right, to a company that might be a bit more exciting in terms of growth, but hey, maybe a little bit unstructured. Like, what would be one or two experiences or lessons you learned over the past couple of months?
Wow. Many learnings. I think just being very transparent, being very open as well. The transition was not easy. It was really not easy. The ways of working, the culture, coming from an international setting and then now coming into a local setting is very different. For sure, I see two things, right? So the first is that when I was in the large MNC, because like billions of dollars are at stake, so we typically do a lot deeper research. Our decisions and the way we execute comes with a lot more deliberation and consideration, because a lot more is at stake. But in a startup, right? In a startup, the test and learn, which is what Sean likes to say, TNL, also stands for the next level, is very important in a small setting. We don't take so much time to deliberate because not so much is at risk. In fact, the longer you take to deliberate and the longer you take to roll things out, you time value, the value of time, right? You're really like missing out on opportunities that could possibly bring growth to the company. So having this attitude and this mindset that fail cheap, fast, and small, not being afraid to fail and being very experimental, being really embracing new ideas and not being afraid to step out. I think this is something, in terms of the ways of working, this is definitely something that I see that's very different. I think this would really be the largest lah. And I also think the second thing is, of course, when you're in a bigger setting, there's more standard of what we call SOPs, right? Standard of operations or standard processes, which gives it more structure and gives it more predictability and stability. But in a smaller setting, you kind of figure it out as you go. It is more chaotic. It is messier, not for the faint-hearted. I see many differences, and of course, these two, are a few of them.
Yeah. So from what I hear, right, is that if people who prefer like a bit more excitement, right, or a bit more uncertainty, right, hey, right, you can potentially join a startup, right, but it's something to keep in mind as you move on to a role from maybe a stable corporate, right, maybe you're just one of the many people in the company versus one, right, that one of your actions can actually have a huge impact, right, for the rest of the company, right. So that's pretty interesting, right. So thanks, Felicia, for sharing. So I think with that, I move on to my next question, right, shifting the nature of it a little bit, right, which is how do you get started investing, right, and how do you and my opinion, I think from what I've observed, I think I knew you for quite a while since you started investing, right? You have seemed to do pretty well, right, within a short period of time, right? So you want to share a little bit about your experience of how do you get started into investing and how do you actually achieve that kind of growth in such a short period of time?
Okay, so Mark, the thing is, I started investing. I bought my first. Do you want to guess when is the first time I bought my first stock?
Wow. So now it's 2021 Jan, right? So I suppose, I know it's 2020, I know it's last year, right? Was it about March? I don't know, maybe during the market crash.
I actually bought my first stock in 2011, 10 years ago. 10 years
that's
ago,
like
when I was in university.
Yeah.
So, and it's very interesting because, I mean, when I do previews, right? When I do like options seminar previews, right? I actually do share my story over there, and I even screenshot. I went into my email and I dug out the past
Nice.
trades that I made. Wow, 2011, 2012. At that time I bought Apple, I bought Sony,
Wow.
I bought AIG, but it was really child's play. At that time it was really child's play. I didn't even know whether I was dissecting the companies correctly. I don't even know what's happening in the market. And then I remember, like I went into this penny stock like in oil and gas just because I read Seeking Alpha. At that time, Seeking Alpha was everything was free, right? And there was so much like all the stock tips and stuff like that. And one of the penny stocks that I bought into, suddenly there was like a stock split. And I was like, oh my God, what to do with it? Stock split, what does stock split even mean? So I started exploring the world of investing at that time, but I bought like 10 stocks, 20 stocks, which of course is not going to like make a person financially free, right? Because it's only $100 each time. And I was kind of like I was in this whole phase of exploration where I also went into land banking and it went bust. So I lost 5 figures. This one, I very openly share with people, and it was really that incident, right, over the years. Like it went bust twice. Okay, so I put it in a couple of projects in land banking. It went bust twice. I lost 5 figures. And from then on, I told myself, right, I am going to handle my own money, because really no one cares about your money more than you do.
Yeah.
So then what happened after, right, was that I enrolled myself in a course in 2018. So I'm going to go and learn the fundamentals of value investing. But I was still very passive at that time. From 2018 up till 2020. So it was last year, when the crash happened, right, that I really became very active. I really like sharpened my sword, and upskilled. And you're asking, so in such a short period of time, let's say just from last year till now, right, being very active in this scene, I would say that 2 things have contributed. I wouldn't say like success, because some people might think success is 200% every year, something like that. Whatever the definition of success is, I'm thankful, that yes, my investments are doing well. And I would attribute it to 2 things. Okay, so the first is that my mentors, super important. Like for me, having Sean, having Pete around, being able to challenge them and get them to challenge my ideas and also really challenge the way I think that's very important, because we always say, right, no one invests alone. Like our community our community, especially in investing, right, it makes or breaks our success in a sense, like if you're in a community that really speculates a lot, and that whole FOMO mindset and attitude really rubs off. So having the right mentors around me, I'm like super thankful for them. So Pete, for example, he will always remind me about emotions and not being binary in investing. And then Sean will always remind me about like long-term thinking, and we'll always challenge the fundamentals and back to the objective of why you want to do a certain trade or a certain investment. So the first reason, right, is really mentors, and therefore, like whether it's in your career, whether it's in investing or whatever areas that you really want to upskill in and be very good at, right, mentors is really the key to shortcut your success in a sense. And the second thing for me is because, like, I think you guys know my background. I was in corporate strategy and management consulting. So I was working with the C-suites of all these multi-billion-dollar businesses. And I will be sitting in there with them in the same office almost every single day, whether is it the CEO, COO, CDO, and I know how these people think about their businesses. So it's very easy for me to understand what's going on in a company when I dissect these companies. And I think this is really, I'm very, very thankful for the years of corporate training, because this has a very important role to play in the way I dissect stocks and the way I look at companies. Sometimes, when I do all these stock dissects, right, I don't really know how to adequately put it in words, because unless you are in that setting or unless you have been in a corporate before where you see the multiple layers of action and the complexity, it's very difficult to communicate that kind of nuance and understanding. But I'm just very, very thankful for those years of experience, and it has really helped me also to pick solid companies in a sense, and that is the fundamentals of how to do well in investing in the stock market.
And I love what you shared. I think number one, I think you talk about having a mentor, right? For those who can't have a mentor, right, at least join a community that you know that the people there, right, are actually legit, right? They have credentials, they actually are able to grow the investment. Or, right, what I always tell people is, okay, if you join a community, right, you should always have like what I call like one or two anchors in the community, right? The leaders of the community that you know that they are good, they are legit, right? And they are able to like push everybody forward, right? So I think that's one thing I love. I think having a power of mentors, people around you that actually support you, right? The second one I think is a very interesting and a very honest sharing about like, hey, right, it was through my working experience, it was through the fact that I've been inside doors with some of the top level, the C-suites, right? It was why I was able to sharpen my investment skills, right? So for those, I just want to add on a little bit before I go to the next question. Like, a lot of people are like, oh shit, like Felicia, like I'm not able to get to this door, so how do I do it, right? So I think number one, right, I think Felicia, she does a lot of stock dissect, so you can check her out on Facebook, right? I'll share the link in the description below. I think number two, right, I think that's something, a learning point for everybody out there, which is that, right, through your own personal working experience, right? Whether it's business, your own career, even your school, right? You might be able to gain what I call unfair advantages that might actually push you and support you forward, right, into your investment journey. So for example, Felicia's unfair advantage is she knows how the C-suite level people talk, right, and analyze and strategize, right? But for example, right, somebody else might be very experienced in the engineering space, right? And because of that, they can look at the engineering companies a lot more, for example, right? So one thing you want to look at, right, is what Felicia has done is to leverage her unfair advantage, right, based on the working experience to support and enhance her investment journey even further. And that's how you can accelerate your time as well, right?
And Mark, I think what you're saying is like, what is your circle of competence? Basically, just now you're saying if you're in engineering, then okay, then maybe you can look at engineering companies, right? So circle of competence is very important. And even if you're, and all of us, we can slowly widen our circle of competence by reading, by expanding our network. And I think that's the way to grow also as an
accelerate.
investor.
Absolutely.
Because Warren Buffett says, right, that when you're investing, you're buying into businesses, right? A good businessman is a good investor. A good investor is kind of like a good businessman. And in order to invest, you have to know how businesses work.
Absolutely. Yeah. So I guess moving on the next question, right? Because first thing, of course, we talk about competence, right? So competence, knowing what you're good at. So I guess the next question is, right, like what do you think, right, are some of the biggest mistakes, right, that investors make, right, based on your observations, right? And I think we also know, and I've been asking this to different investment trainers, Sean, Pete. I would love to hear observations as well, which is that, right? I'm sure you have taught quite a number of students, right, participants in your programs, right? So what do you think are some of the differences between your most successful students, right, and some who I might not be at the era of life they were like, right, in terms of the investment journey and success, right? So I guess the differences between the successful ones and those who might still be pretty stuck, and what do you think are some of the biggest mistakes that investors should really look out for and avoid, right, in their investment journey, especially when starting out?
Yeah. Okay. Great question, right? Because I'm going to share the three mistakes that new investors, or not even new investors, seasoned investors make. And on the flip side, what are these three characteristics of successful students that I've seen? Okay, so the first is really the whole point about action taking. I can tell you, right, that we have many students coming through the door. But we see two kinds of students, okay? One, the pain, right, or the motivation for them to invest is not big enough. So after they learn investing already, they just, go back to their normal life and don't take any action. And I can tell you that the opportunity cost is huge because each time, I tell you, when I was just calculating, right, I was just doing the math. Even if you put in, let's say, a 50K in an ETF, a super safe, right, ETF, QQQ, compounded growth of 20%. Do you know that for if you invest it today as compared to if you hold off your investments to next year, do you know that your difference in your compounded profits, right? It's another 50K. It's 100% of your ROI. In for every 1 year that you delay your investments.
Potentially missing out 50K down the road. Wow.
It's 100% of your ROI, and each year, right, it just increases and increases and increases after the 10th year. After the 10th year, there's no way that you can catch up, right? Let's say I invest today, and then Mark invests next year, right? Mark invest next year, and we invest in the same ETF. There is no way that your investments, right, is going to catch up with mine, and the gap is going to be larger and larger year after year. And you know, very interestingly, right? So after one of the OMIs, so my friends have been attending the options millionaire intensive, right? So after it was just November and December, I have this friend, you know, after attending OMI, 1 week after, she sent me a message. She said, Felicia, I already made like $900, $800 and $900, you know, $900. And then I asked her, I said, hey, great job. You know, what was your starting capital? Then she said 3.5K. And she said within 1 week, right, she actually made 25% of her ROI after attending OMI. And then, very interestingly, someone else responded, because I posted this, right? Then someone else responded on top of this post. You know, I attended OMI in August and haven't taken action. Finally, he took action. Like that was towards the end of last year, and then he made 1%.
Wow.
But you see, right? So the first thing is, right, action taking is very, very important. I really see this. This is one of the difference between someone who doesn't profit from the market and someone who profits from the market. But the second thing, right, which is very important, is also consistency and discipline. So something that I see, and this has to do with the emotional side of things, and your whole like self-control of your, self-control of your inner world. You know, like Warren Buffett says, right, that investing is not a game of IQ. The person, he said, investing is not a game where a person of IQ 180 beats a person with IQ 130. Yep. He said it is a game of temperance. And what is temperance? Temperance is emotional control and being able to be consistent and disciplined. Meaning what? For example, very simple, portfolio sizing, right? You don't go and dump all your 100% in one speculative stock or 2 or 3 speculative stocks, especially, you know, in this day and age. The stock market is just full of this kind of, Mark, you also know, right? It's full of all this unprofitable, high growth, but also high risk companies. And I know of people who are just chucking their 100% of their portfolio just into 2-3 of all these like speculative stocks, right? We also know recently this company called GameStop, right? GME.
Yeah. Wow.
Whoa, it went up like 200% in how many days? And it's a pump and dump stock, you know, and people are just rushing in and it's so speculative, you know. So the second thing is really this whole emotional control and being consistent and disciplined. For example, portfolio sizing, or if you've learned options, right, following the basic rules, like not being too overly FOMO, or not being too like overly fearful. It's really a balance, right? That's the second. So the first is action taking, the second is consistency and emotional control, and the third is really having an independent mindset. What does an independent mindset mean? It means that no shortcuts, you know, no shortcuts. Some people, right, they want others to do the homework for them, or they rely a lot on trade signals, okay? But I know of people who have lost like 100 over K, like more than half their portfolio, to trade signals, or like following different ones, you know, in the market. Hey, you can buy this, hey, you can buy that, hey, you know, like not having an independent mindset. And it's so sad, you know, these people, right, you know, they these are the students that have come through the doors and say that, oh, you know, I really went through this very depressive period where I lost more than half my portfolio, or 80%, you know, one of them even lost like 80% of the portfolio following trade signals. So I think in having an independent mindset, right, and being very diligent with the way you dissect your companies, the way you analyze your companies, and being very convicted is very important. So these three things, action taking, consistency and emotional control, and having an independent mindset.
Yeah, I love it, right? I think especially your last point, where I think you talk about how a lot of people, they're just like looking for trade signals, right, or just trade lobangs, right? It's okay. So I always tell people that it's okay to go and listen to them, but right, after that, you got to do your own due diligence, right, to make sure that you understand the company and you understand the trade, and you know when to even take out the risk, right, take out the position, because sometimes, yes, right, trade might go to zero, and the people giving these stock tips or signals, right, might not tell you when they were exiting in the first place, right? So I think I love what you shared about, like, you got to build your own due diligence.
And you know what's very interesting is because I've been doing all this stock dissects on the Next Level All Stars, the Facebook group, and also on my Facebook, like, and I mean, thank God, right? I mean, these stocks that I dissected so far, quite a few of them just suddenly rallied or suddenly spiked. But these are companies with solid fundamentals,
Yep.
okay? And people who follow my Facebook dissect, they also invested in these stocks that I dissected. But very interestingly, when it spikes up, right? Recently like Schwab, what else? Yeah, T-Dog, various companies that I dissected, it spiked. Then people start asking me, start PMing me, Felicia, should I take profits? Hey, do you think that the prices can still go higher? Hey, what should I do? And I'm like, guys, what's very important, right? Is after you watch my trade, my stock dissects, right?
Yeah.
Is that you go and do your own homework. Just don't take everything that I say on face value. How do you know that I didn't make a mistake in my stock dissect, right? Or let's say my conviction, because I'm the one doing the homework, my conviction in a certain stock can be a lot stronger, such that even if let's say it comes crashing down, or even if there's a price correction, I'm willing to hold on to it. But as compared to someone who just listened to my stock dissect, if let's say there is a price correction, are you going to just suddenly dump your stocks out of fear? Very, very, very important. Just building your own conviction.
Yeah, and sometimes if you can invest in the right company, but you can exit so early, right? There's such a big waste, right? So I think that's a huge reminder for a lot of investors out there who are just following and they're just taking, hopefully had the 100%, 200% return and then exiting. But sometimes it could potentially be 1,000, 5,000%, who knows, right? So I think that's a very good reminder for a lot of people out there. So I guess the next question, right, is what are your actionable tips, right? So for example, if you're a new investor, right, what are some actionable tips for new or even struggling investors, right, on how they could actually start off their journey, right, to become a lot more effective, a lot more profitable in the long run, right? What are some tips or actionable steps you feel that a lot of new investors could do more of for maybe this year?
Yeah, we talk about these two things, right? The first is methods and the second is mindset. So I think for a new investor, for example, you have to know it all starts with awareness, with self-awareness. Which is the area that you need most improvement in? Is it the methods? Is it the area of methods that you're struggling with? And when methods, right, there are different kind of methods. You have your technical analysis, your fundamental analysis, you have your options. So you have to know which area you need help in, right? For example, if it's the area of identifying solid stocks, right? Then you can start from first reflecting and asking yourself, number one, what is your circle of competence? Which are the industries that I really understand or I'm interested to understand and I'm willing to dig into? Then you go and use sites like Morningstar, right? Morningstar.com to dig into their financials and read analysis reports. Or you can go into Guru Focus. Guru Focus is another one that gives you information on the company, helps you to deep dive. Or Finviz, right? So Morningstar, Guru Focus, Finviz. These are the three
websites,
three sites that I go into to dig more into a company. And on top of that, right, I'm just gonna just say it off my head. There is this Simply Wall Street. There is 4-Week MBA. There is this businessstrategy.com. All these three sites, right, help you. Sometimes they have case studies also breaking down the different companies, and you can go and read through their case studies and see how they break down companies, right? So it's super applicable. You guys can go and use these websites. And then the second thing is, right, in terms of mindset and emotional management, setting up trade journals. This is once again super actionable and it is very, very, very useful, especially if you're a new investor. What is a trade journal? If you guys have journaled before, it's basically taking down what are your thoughts, right? What are your thoughts? So a trade journal can have different columns. Can have various columns. And your first column can, let's say, be your ticker symbol. And then your second column can be your entry price and why you enter. What is your reason for entry? How do you feel when you enter? Then your third column can be exit price. Why do you exit? How do you feel when you exit? And then your fourth column can be what's your portfolio sizing, right? How much percent of your portfolio are you putting into it? And then your last column can be, for example, what went well with this trade? What went wrong with this trade when you close off the trade? So you will start to notice that there is a certain pattern, right? Or either that, right? Let's say before you enter a trade, when you journal, then you catch yourself, let's say, my reason for entry, FOMO. Then obviously you're not going to enter the trade because you catch yourself in this emotion of missing out, right? So or when you exit, when you exit, I'm exiting, oh, because there is a market crash, I don't know whether the company is going to survive or not. Then what does it tell you about? It tells you maybe you have not built your conviction in this particular company, right?
Yeah.
Maybe you haven't done enough homework. So it's very, very important being self-aware, and trade journals have really helped students a lot.
Wow, I think the part of trade journal is something that a lot more people could have benefited from. And I think just want to add on a little bit, right? Because people say that, hey, trade journal, is it only for traders? No, it's not, right? It's also for stock investors, right? Who are in for the long term as well, right? So I think those are huge actionable tips that people can take right away. They can actually help support their journeys much more often. And it really builds self-awareness, especially the part on journal, right? I think that's something that's so important.
In
right?
fact, I don't think traders do journals, man, honestly, Mark. Because traders are just in and out of the market. I don't even think they remember what is the exit or entry price that they went in at. I mean, like, if we go with the technical definition of traders, which is like just high volume trades.
Yeah, definitely. So I guess moving on to the next question, right? So I think you have gave some awesome tips and concepts that really is like some people might what I call underestimate it. Some people might think it's common knowledge, right? But I wish to remind people that common knowledge is not common practice, right? So I think if you apply a lot of these concepts that Felicia mentioned, right, the probability of your investment journey being so much more profitable while being able to sleep soundly at night, right, it's going to be so much higher, right? So I think moving on from some of these evergreen concepts, right, I want to move on a little bit about the market that's going on right now in 2020 as of this 2021. As of this time of the interview, right? So what are your, I guess we could just start off maybe just a little bit about what are your general thoughts about the stock market right now? Do you think it's a bit overvalued? Do you think it's a bit too late for investors? Come on, like what are your general thoughts about whatever is happening in the market right now, right? And I guess we can focus a little bit on the US market because that's what we are focused on. Yeah,
I actually do have some slides, maybe you can let me share my screen.
Sure.
So while Mark does the settings,
Done.
right? Just generally, I think that definitely, the overall market is heated from the standpoint of GDP, okay, from the standpoint of GDP, especially in the US, right? We see the largest GDP decline last year, but what's happening in the stock market is exactly the opposite, right? GDP is going down this way, but the stock market is going up this way. So there is a huge gap, there is a huge gap. And okay, so that is from a snapshot point of view, okay, like a snapshot. But if we were to zoom out, right? What we see when we compare it to other decades is that this could potentially be the start of a bull run. This could potentially be the start of a bull run, because if we just pull it out into the past 3 decades and I've compared it, typically the correction comes and then bull run is like 8-10 years, right? And then correction comes and then bull run for 8-10 years. Same has happened last year. There was a correction, but then the very interesting thing is that the market in all its history has not recovered as quickly as what it did, what it has, the pace at which it has recovered before. The past few months, like how we have seen the past few months.
Yeah.
And this is a little bit scary. I just want to show you guys. Let me share my screen. Okay, so you guys can see, right? You guys can see my screen.
Yep.
What's happening, right, is that, you guys see this margin debt and you guys see the S&P 500. So the debt, this margin debt, right, means that people are borrowing money to pump it into the stock market. Can you see that it is extremely scary, right? That the amount of debt that is taken is at all-time highs. It's at all-time highs, And you see what happens is that when it's at all-time highs, right, what does it do? It comes crashing down, boom, right? Each time and time again. And I believe that history repeats itself. And this to me is really a warning. And just look at this. Their fear greed level, right, in the market is extreme greed, it's extreme greed. It is insane. It's extreme greed. And we always learn, right, like we want to take the contrarian approach. And so if the market is extremely greedy, I think this is the time that we should be a little bit more careful, because when it's extremely greedy, right, it means that people are in and out of the markets. People are pumping money into stocks that doesn't necessarily have its fundamentals. And something else that also, like, it's quite hair-raising to me, right? Just look at this. Okay, so what's happening is that okay, this blue line represents the volume of options trading, and the small options trading, meaning by retail investors. And you can see that it is at unprecedented levels. You can see over the years, the 2000s, right? is at unprecedented levels. It's super scary. It is these people, right, that are pumping in money into the market and pushing it up high. And we know what has happened, right? So many stories from Robinhood, how people, just boom, it just went crash, right? How many people committed suicide? I'm like, oh my gosh, it's just insane. The amount of speculation, the amount of greed, the amount of borrowing. So for me, this is something, it's really, really something to take note lah. Yeah, it's really something to take note. Let me just stop sharing my screen. Yeah, so this is something to take note. Having said that, okay, we always know we can never time the market because we're not God. Like we won't know whether the market is going to continue running or whether it's going to crash tomorrow. So I think it always comes back to the fundamentals, right? Like the companies that we are holding right now, are they good companies? Did we buy them at obscenely overpriced levels, which is what many of the companies are trading at right now? And how to get ready, right, is by reevaluating what's in your portfolio. Yeah, reevaluating how much you are putting into speculative stocks versus how much are you putting into really the giants with the solid fundamentals. That's one way. Or if not, if you're afraid, you can hold cash, you can take your profits. But so I think at the end of the day, we want to know where the stock market is heading because we want to know what to do with our portfolio, right? That's the thing. We don't want to just know about the market and then that's it. People want to know what to do with their portfolio. And I must say that it really boils down to what is your risk appetite and also how nimble and how agile you are to decide what you want to do. But as I mentioned just now, very, very importantly, go and reevaluate the fundamentals of the companies that you're holding. And
Yeah, I think that's a very stark reminder for a lot of investors, which we get it through science data, right? Through what you shared, but I think through the conversations with different communities, following different people, right? Especially with the newer guys, right? You can see a lot of them are like hyped up, excited, right? They think there's like gambling where it's almost a sure win, right? And that's actually the first signs of like a lot of greed coming in, right? And if you go down to the basics, as in Warren Buffett, right? Which is that, hey, right, when people are greedy, it's time to be like a bit more careful, right? And I think moving on, I think besides what you shared about reevaluating portfolio, I think that it's also a good time for a lot of investors to mentally prepare themselves or to ground themselves that, hey, a correction is potentially coming, do as we will, right? But are you really prepared to ride out a potential correction that might come in? If it doesn't, then great for you, right? But if it does, right, you're actually mentally prepared, right? So that you can tide through the difficult period, like what most people failed to do, right, in my opinion, in March in 2020, right? So I think that's a very good reminder from what you shared. And thanks so much for sharing those slides, man. I think even for me, that's a reminder for myself as well.
Warren Buffett said something that I was very, it really reminded me. So he had this quote also that talks about how if you're unable to stomach a 50% drop in your portfolio, then you shouldn't be investing. The thing is, whenever we are in the stock market, right, it's inevitable that there will be times where your portfolio, let's say, goes into the reds because there will be times of correction.
Yep.
That's why it's so important to have long-term thinking because the stock market, the US stock market has always gone up, always, historically, always. So even if, let's say, your portfolio is in the rates right now, if you hold it long enough and if it is solid companies, it will one day go up. Maybe just not as fast, right? Maybe just not as fast as people who entered during a crash. But as long as you have the holding power, which is what Mark, you have said just now, then I think there's nothing much to worry about.
Yeah, that's good. So I think also then moving on a bit deeper, right? Besides just the general market, is I guess we all know today that the market is just favoring tech stocks like crazy, man. Right? Like you said, the T-Dog and stuff, a lot of technology companies. So in your opinion, just a quick one, like do you think it's overvalued, right? What do you think about tech stocks right now, right? I think just now you said yes, there's a bit of probably a overvaluation, but yeah, like you want to share a little bit about that as well.
Yeah, so you can see, right, here, okay? So the tech sectors, right, they are really the ones driving up the markets, there is a huge, yeah. So basically, your question was, what do I think about the tech stocks, or what do I think about?
Yeah, generally, do you think it's overvalued, the sector? What was your thought about it? Yeah.
It's tremendously overvalued. It's tremendously overvalued. We know it. If we compare, just recently also, I was teaching the students in OMI, and I was just showing them, it is insane. Do you know that what took the FANG stocks? So the FANG stocks, which is your Facebook, Facebook, Amazon, Microsoft, Google. what else?
Just in the main.
Oh,
Apple.
Netflix, right?
Yeah.
Apple. What took them 5 years to achieve in terms of ROI? It's taking the new SaaS companies and your data analytics companies 1 year to achieve, in terms of ROI. Okay, it has times five. And the stock market, we know, is a leading indicator of what's to come. So that means the stock market, the investors are super hopeful that these tech companies, although unprofitable today, will bring in a lot of money at the end of their life cycle, which is what we call time duration stocks. Time duration stocks, which is a lot of what you're paying upfront today, you're paying for the end value of the company.
Yeah.
So there's a lot of investments that is going into all this data analytics, SaaS, cybersecurity companies to build capabilities, to build technologies, so that they can eventually grow their base and also upsell and cross-sell to their current customers.
Yep.
Having said that, some of these companies do not have a proven business model. That means people are really taking a bet that, hey, this business model is going to work. Although we are trading at like 80 PS, price to sales ratio. Yeah. So and I think once again, right? So it goes down to portfolio sizing, right? If let's say you're interested in tech stocks, I am very interested in tech stocks. A lot of my portfolio is in tech stocks, but is it the speculative ones? Not so much in the speculative ones, right? So once again, it goes back to like portfolio sizing and what you know about the companies.
Yeah, as in maybe it's not as extreme, right? As I haven't read so much into it, right? It's like it might be similar a bit to the internet bubble, right? Back in 2000s, right? That, okay, once your SaaS company, bam, you're up, right? I think last time was a bit more extreme. Maybe investors weren't as educated. I don't know, right? But that's just something to watch out for. That are the companies investing in really something that's growing. I think one big example was the company called Amazon, right? 2000s, I think the stock was doing well in 1990s, right? But I think it dropped about 60%, if I'm not wrong, in 2000, even though the company was growing like crazy. So yes, there's opportunities, but imagine if you're a holder of Amazon, right? If you still held on it, even though there was a crash of 60%, you'd be super rich right now. But if you decide to sell it during that crash, right? Oh, you'll be like kicking yourself, man. So I think that's a very good reminder for a lot of the investors out there, right? That, hey, if the crash comes, right, are you prepared, right, to hold it out, and are you even prepared to buy more, right? So thanks for that. So I guess with that, the next question, right? I think these are a bit more personal, right? If you'd like to share, like, based on your current investment thesis and status right now, like, what are some of the sectors and stocks that might be in your radar? If you could just share with the community, right? I think people will be very interested to know based on your experience and stuff. What are some of the stocks and sectors in your radar right now with whatever that's going on?
Yeah, so the first is clean energy and sustainability stocks, right? And I think this we know that the various governments, right? US government, in Europe, OPEC, OECD, they have all these environmental sustainability mandates and missions and visions that is being cascaded down to businesses. So meaning that if your business, through its operations, emits a certain percentage of carbon, let's say carbon emissions, or causes certain pollution in the water, in the air, different kind of pollutions like waste, right? You will get fined. So the legislations are becoming more and more stringent, and we know that we do have to take action. If not, this earth is going to die. It might sound fluffy, but based on all the scientific research and that's how they calculate it. I think it's like 2050. I can't remember what was the date. But basically we have to do something now. Yep. So clean energy is definitely one sector that I'm looking at, and I think Sean has also talked about it in his Facebook Live. And this leads me to, let's say, like electric vehicles, like the EV, the whole EV sector. I think it is definitely, it is promising. Having said that, the space is getting too crowded. Okay, the space is getting too crowded. So clean energy, EV, and a lot of what I have in my portfolio is in tech. But once again, tech, right? There's so many kind of tech. So what kind of tech, right? The FANGs, you have your FANGs, you have your cybersecurity. Payments is going to be a large space, payments, because, most of the industries are being disrupted by digital. You're going online. If there's transactions that's happening online and across borders, then you will have to go through payments, right? So payments is definitely a big space. Data, we know, right? So data analytics, which is why your DDogs and your Crowd and other companies, they're really soaring. So that's the whole tech space. And the last one, okay, the last one I got the idea more from like ARC. So we know, right, Kathy Wood. It's more like into the genome, like the whole genomic space, which I mean, I how would I say? One of the companies that I worked with prior was in the whole, let's say, nutrition and also a little bit of like the bio side of things.
Yep.
And genomics is definitely something that is up and coming. Having said that, okay, I think the volume, the traction, the mass impact that it can make is still questionable. Okay, it's still questionable. So this is one area that I am still digging into. Yeah,
the genomics space. Yeah. So as in disclaimer, right? Like I recently started like looking a little bit more genomics space, but I'm like my in the past I was an art student, right? My science wasn't good, right? It was one of my worst subjects. So I'm having a tough time like trying to read it up, man. So if you have anything, just let me know. At the same time as well. Yeah. So hey, thanks for sharing so openly, right, about some of the sectors. I think these are sectors that I also personally feel that will grow in the next 5 to 10 years time, right? How much, what the companies that win, we might not know for sure. But if you invest in these sectors, right, my take is at least, right, you have some confidence that the likelihood of growth actually could be pretty strong, right? So thanks for sharing for that. So I guess the next question, I think, is a lot of people's minds right now, right? I know Donald Trump just left, right? Biden is coming in, right? So I think a lot of people don't know about what's going to happen within the relations between US and China, right? I think there's one portion of it. So like, do you have any quick thoughts on like how's US going to be? Is China going to take over US? Is China going to take over the world, right? How's the currency going to be like for US in the first place? Like do you have any quick thoughts on your that based on conversations and your study?
I think, right, for those of you who are watching, how much I know about what's happening in the US is how much you know. It's publicly available information. I don't have friends in the US, in the US Senate. But what I can show you is this. Here, look at this. So it was recently published just 2 days ago, you guys can see. China, in terms of its foreign investments, overtook the US. In fact, you know, in 2019, right? 2019, US FDI, that means the foreign investments, was nearly double, you know, of China. But do you know that last year, in 2020, just in 1 year, China overtook the US, 163 billion as compared to 134 billion. And it's incredible. Also, you know, the economic and business research in the UK, they're saying that China will overtake the US to become the world's largest economy by 2028. 5 years earlier than previously forecasted, 5 years earlier. Not only that, just have a look at this. So this is the forecast. Okay, this is the forecast of the China economy and the US economy in terms of GDP. And GDP basically tells us what's the economic activity and how much money it's generating in the economy, right, through the businesses. So China's share of the world economy has risen from just 3.6% in 2000 to like times 5, more than times 5, which is like close to 18% now, you know, now. And the company will become a high income company in 2023. You know that the China's population, 1.5 billion, it is so huge. You know, like more than 1/5 of the entire world's population comes from China. And honestly, China don't need anyone else to survive because of the sheer base. Even if you get 0.01% of the economy, let's say even if your business penetrates like 0.01 of the population, you will still make a ton of money, you know. So really, I mean, it's inevitable that China is going to, in my personal opinion, okay, based on stats as well, it is going to soar. It is going to take over the US. Yeah.
Wow. I think that's interesting data there that China, right, as much as some of us might disagree with their views and stuff in the government, but wow, look at that. The numbers just speak for itself, man.
Yeah, so I mean, in terms of the trade war, honestly, I think if US decides to, but I don't think it's going to go that way because Biden is more of like the peacemaker. He's kind of like, less of he's less of a protectionist kind of person. So, but even if let's say they decide to go into the whole trade war, it will do US a disfavor. In the long term, it will do US a disfavor. I don't think that's a smart move, and I don't think that they're going to do that.
Okay, yeah. So I guess that's a good for China, right? And we'll see like whether it's speaking Chinese a bit more important in the next few years. I better brush up. My Chinese isn't that strong. So the next one, I guess something is on top of people's minds, right? Just a few more before end of the interview, right? There's like blockchain, cryptocurrencies, right? What are your thoughts on that? I think that's something that's getting sexier right now, right? It dropped a little bit as of this time of interview, but yeah, what are your quick thoughts about crypto and blockchain, man?
I have slides for everything, right? Look at
Wow,
this.
right.
Okay, so basically, right? Now some thoughts on crypto. I think there's a lot of speculation that's going on. Okay, there's a lot of speculation. Having said that, generally the economy and even institutions, they recognize the use of it, and they recognize that there is some value behind it, and therefore there are more and more institutional players that are coming in to play. For example, like your PayPal, your Visa, they are making it, they are coming up with all these crypto wallets to make it available to the masses, which is going to be powerful. On top of that, the world's largest asset manager, which is BlackRock, a couple of days ago, or I think a week ago, they gave 2 of their funds the go ahead to invest in Bitcoin futures. Okay, and on top of BlackRock, right, there are many institutional players that are already pumping in money into the space. In fact, so Deutsche Bank, right, they did a forecast. They're saying that the adoption of crypto is going to times 4. It's going to quadruple in the next 10 years or even faster. Similar to the likes of the adoption and the penetration of the internet when it first came out. So that is the rate at which it is going to grow. But it's not a lot. It's not a lot. It's 200 million. Okay, so 200 million in 10 years' time. But I think it's probably going to be more than that. Okay, given the quick adoption and how there's money flowing from the institutions.
Yeah.
I think for me, right, when I look at it, people are putting in money as a store of value, because what's happening is that bonds are yielding very low rates. Interest rates in the banks are like close to zero. The equities market is super expensive. I mean, like it's at all-time highs now. So where else do you put your money? Into gold, people put it into commodities, and then now people are putting it into cryptocurrency.
Yeah.
So, for example, BlackRock, the CIO of BlackRock for fixed income, okay, the CIO, he told CNBC that cryptocurrency may be here to stay and could even replace gold to a large extent, noting that it was much more functional than the yellow metal.
Wow.
So, and this is the CIO of the world's largest asset manager.
Yeah.
Okay, so I think people, I mean, it's not just retail, but the institutions are seeing that this could potentially be really an alternative store of value. And I personally do have a long-term view of it. Although, of course, we see a lot of fluctuations now and the market doesn't know how to price it. So once again, I think, if anyone wants to enter, then they can DCA, a dollar cost average in, have a long-term view, What are your thoughts, Mark? Are you invested into crypto?
Yeah, so for me, I have an indirect investment in crypto, very indirect through Square, right? So that's my indirect. So why I haven't chosen Bitcoin is honestly, am I FOMO? Am I like, oh my God, shoot up and stuff, right? Am I afraid? Yeah, maybe part of it. But I feel that right now, if I were invested in Bitcoin, right, it's more of just praying and hoping they'll go up rather than a store of value for me. So that goes against my investment thesis, right? So as hard as it is, right, I'm like, if the only reason I'm investing is because everybody's talking about it, right? And I don't really know what can it be used for, right? Maybe not at the moment, right? Maybe it's a hedge. So the only reason why I'm thinking of investing right now, right, is more so of a potential hedge against the market, against the US currency and stuff, right? More than anything else. So I finally managed to think of something that I can use Bitcoin for instead of just investing just because everybody's talking about it. So people might say I'm slow and stuff. Maybe I am, but so that's just my thoughts on it right now. But I have an indirect investment. So at least I'm like, hey, I got Square. So that's something.
Exactly. And Square is really, I mean, crypto is it's one of the promising pillars in Square, because it's really on over there. Very interestingly, one of my friends in the US, right, he was telling me that one of his clients just paid him in Bitcoin for his
wow.
He works as an intermediary between the investment banks and the clients.
Yeah.
And they just transacted in Bitcoin.
Was it through the Cash App?
I don't know
I
what
hope so. I hope so. But anyway,
Maybe
yeah.
it's too square.
That'd be good. Yeah. So I guess moving on to my final question, right? So anyway, thanks, Felicia. Like you shared a lot of info. There's a lot of slides, which is good, right? I think sometimes people are a bit too broad. So I think some good hard data is good as well. But so what so this is more of a hypothetical question, right? Like right now today, like Felicia, for example, you have to start completely from scratch, right? In your investment journey, right? As an investor, right? So what would you do in the first 30 days, right, to get back on track, right? And just for the sake of it, let's say you're starting out with $10,000, right? A reasonable savings for a lot of 9 to 5 working professionals in our age, right? $10,000, right? What will you do right now, right? If you had to start completely from scratch in the first 30 days to get back to not only where you are today, right, but even beyond, right? For down the road.
You mean assuming I haven't invested at all, is it?
Yeah. Assuming you are new, right? What we do, like starting completely from scratch, like if you restart your whole entire portfolio.
Yeah. Number one, open your brokerage. I think some people are even stuck at that, It's very practical, okay? And it might seem like a very minute thing, right? But honestly, the number of people who are PMing me, how to open brokerage account, what brokerage you use. I mean, it's just like fascinating. So number one, right? Open brokerage. Number two, okay, you're saying like 10K, right? Let's say you give me 10K.
Yeah.
Then I will ask myself, what is my objective? Because I think, and when I teach my students, right, I always liken it to the analogy of a house, right? When you before you build a house, what do you need? You need to know your objective. Are you going to stay alone? Is your house for 5 people? Is your house for like a couple? Because your objective determines your game plan, Like, you have to know how many rooms to build, how many toilets. Only then do you know how much cement, how many tiles, how many bricks, right? And how to stack them. So I will first ask, what is my objective? Is it income, or is it for hyper growth, right? Yeah. And from there, it will determine the kind of stocks that I put into my portfolio. So number one, open brokerage. Number two, really thinking about the strategy, the blueprint of my 10K. Number three, asking myself then, what is my circle of competence, right? What do I really understand? And then based on that, then I go and select stocks, right? Select a basket of stocks. And number four, very importantly, finding people who can help me. Because once again, right, you cannot invest alone. Like I have not seen anyone who has invested alone and achieved that kind of like success. More often than not, many sad stories, unfortunately. So and number four, once again, I will go and get help from people whom I trust, whom I know are experts in this area. Because your community really determines your success, really. And your community determines your success, and having a mentor, right, really shortcuts your journey to success. No one invests alone.
Yeah, from what I hear, right, is of course to first open a brokerage account, right? But I think your actions 2, 3, and 4 is really what I call setting the groundwork, right? Setting the foundation, right, for what would then mean a profitable investment journey down the road, right? Instead of like investing in one company immediately, right? It's about, okay, what do I exactly want? What's my circle of competence, right? Who can I support in terms of trust, in terms of providing, in terms of resources, insights, and perspectives that can help me grow my journey in the long run, right? So thanks so much for sharing for that. So I guess Felicia, thanks for today's interview. I think it was a little detailed. It was good, right? I think it was comprehensive, right? So any last words for my community out there, right? And how can my audience find you if they want to?
Oh, yeah. So thanks again, Mark, for having me here. Last words. No last words. I think I've said a lot, guys, can digest what I've said. I think just be prudent, know what you're doing. Temperance is very important in investing and community. If you want to find me, you can find me on Facebook. Okay, two places. On Facebook, you can follow me on Felicia Fong, the investment and business strategist. So that's on Facebook. Or you can find me on my Telegram. So I'm more active in updating my Telegram as well. My Telegram link is on my Facebook page, or if not, you can find my Telegram group is called Fortune Fong.
Oh, okay. Yeah, we can put the links there. You put the links there in the description.
I can put it inside there.
Yeah, you can send it to me. I will put it in the
Sure. Yeah. So I do updates over there, and looking forward to having you guys join the community.
Great. So I think with that, Felicia, I just want to say a big thank you, man. I mean, like, I know you moving on to this, the world of like investment and education, right, to the masses, right. It's not something that was an easy decision, but I think with that, I think you have contributed so much value to people out there, right. You've given so much value, right. You have taught a lot of people. I think you probably helped a lot of people in their financial journey over the past year. So, kudos to you, right, for taking the challenge and helping to serve, right, instead of just moving to a road that hey, might earn a bit of money, but hey, right. I think in my opinion, right, I really feel that the space of where we are at in terms of education and stuff, right, is actually pretty meaningful and purposeful in my opinion, right? So thanks for that again. And yeah, with that, thanks Gal for coming on the interview, right? Connect soon, and we would love to bring you on for maybe a second round, maybe down the road. Yeah.
Thanks
Right.
for having me, Mark, and
Thanks.
also kudos to everything that you are doing. You know, I can really see the impact of what you're doing, and I think really the principles that you're sharing in your master implementers group, right? You know, I think it's very, very grounding and it's very calming, it's very grounding, and it really helps people to like shut out all the noise. There's so much noise around us now. So kudos to you.
Yeah.
Wow. Yeah.
All right. Thanks, Felicia. So with that, thanks guys for coming on the interview, and I'll see you guys soon. Right. Bye everyone. Bye bye.